Hi there, and welcome to this week's market update on the 19th of January. Don't forget that any advice contained within this video is general only, so it isn't tailored to your particular circumstances, and you need to decide for yourself whether it's appropriate to you. Okay, so nothing much has really changed in the past week in the way of our market, guys. We're just drifting sideways in a very, very tight range. The big bullish day we've seen today, though, shows there's still plenty of buying around, and really the way we're holding through the top of this channel, I do feel the breakout is coming soon. If we do break out, the next target really is not that far away. Next little bit of resistance is around that sort of 69 or just below 69 there. But if we clip through that, which we could easily do, we're coming back to the all-time levels around that 7,200, and really that's where we were pre-COVID. There's no reason with all the additional stimulus coming, and that has happened over the past sort of 6 to 8 months in Australia. There's no reason why we can't be back there, guys, right? I think it's very achievable in the next 3 months for sure, okay? And that's sort of where I'm at, right? Anything can happen, obviously. There could be some new news tomorrow that's going to stop that. But look, the way things, if I just weigh up everything on the table right now, I still feel we're breaking higher and going back up there. I'm just going to get through the little bit of political unrest this week in the US, and I think things might look very, very different. So coming across to the US, they had a little bit of a pullback late last week. So really with that, we saw the banks report. They pulled back a touch on Friday. The banks actually reported quite well, right, overall. But they had into that report, so it was no sort of surprise to see some weakness afterwards. But nonetheless, there's still potential for some of those banks to rise. Okay, not all. Some are already at pre-COVID highs. But many still aren't at pre-COVID highs yet. That could easily keep rallying over the next sort of couple of months. So look, the US at this stage back at trend overall. Last night they were closed for Martin Luther King Jr. Day. Let's see what happens when they reopen tonight. The US futures are very positive as I speak. So do suspect that it's going to hold this trend and continue to push back up. The big question here for us is, are we going to continue are they going to continue sideways, or is this going to be a continuation of the trend? And that's what we're waiting for, right? A break of the resistance gives us that confirmation. A break of the pennant gets us long in anticipation of whether that's going to break or not. So tonight's the night. Admittedly, we've already gone long today on a few trades. Looking for a little bit more confirmation. We'll add to that as we go. So technicals are there. Look, our market's looking pretty bullish, but at resistance. S&P 500 likely to be bullish tonight, but it's going to be at resistance. So still looking for a little bit of confirmation to get that continuation of this overall trend at the moment. But this is, pretty important week in the US. Joe Biden becomes president. Let's see what he tackles first. There's a lot to look at. There's a lot to think about. And this is where the dynamic can change very quickly depending on what he pushes forward with first. Most people want stimulus, right? So that's the big thing, okay? More stimulus, more stimulus, more stimulus. The more stimulus they keep pumping into this environment, the more equities will keep going up. That's the formula, right? The moment that you start to see more of a sort of hawkish or sort of neutral Fed, people talking that there's no more stimulus, people talking no more QE, that sort of chatter is going to be very negative market. So at this point, more stimulus, the better to keep this rally going. The other thing is whether there's going to be riots or not. Look, I just, a few people have brought that up to me today. I'm kind of in two minds. I don't really think it's going to affect markets that much. We didn't see everything that happened in the last riots affect anything in Washington. Like that really didn't stop the market, right? So I just think everybody's looking forward to a bit of stabilization over in the US politically. I think Joe Biden's going to bring that. And it's just a matter of, what he can do before he starts talking about corporate tax. The moment he starts talking corporate tax going up, I think the market might sort of send a bit of a message there. But look, at this point, I think it's all positive in the short term, okay, in around the election and Joe Biden becoming president. So US reporting, look, it's just kicked off. What we've seen so far is mainly banks. Out of those banks, they all pretty much bet expectations, and I thought they looked pretty good in comparable to last quarter as well. So overall, pretty good start. Very early days. We'll get a bit more tonight. And we'll just keep looking at it as it goes through. So yeah, a lot more coming through the next couple of weeks. I think that gives us a window into how things are actually going over there. Once again, any movements that happen around reporting, it tends to be company related rather than the whole index. So I do suspect that, you know, if one sector of the market's weak, the money's going to move to another sector, guys. I can't see a big market sell-off on the back of reporting here. What I can see is the market continuing to edge higher as people make up their mind where they want to be invested this year. I think you could see a lot of sector switching, a lot of stock switching as people move away from stocks that are underperforming and back into value stocks that might be looking cheap, that have good guidance moving forward. So look, it is an important reporting season here. Aussie reporting doesn't kick off until February. Okay, so we've still got a little bit of time before that, but we'll be taking hints from the US reporting anyway, right, to work out what sectors are likely to outperform. So as I've said, the banks have been rallying in the US pretty hard, a lot higher since end of sort of start of November after the election. Look, there's a few things happening in this space. Banks in Australia are able to pay better dividends again 2021, so hopefully we'll see better dividends out of them. I think people are chasing a bit of yield there. The US banks are going up on the fact that the Fed's now allowing them to buy back shares again. And, you know, reasonable reporting as well. So I think that's all sort of being cooked into this space. Looking at the banks though, like when you look at our big four, Commonwealth Bank's already close to where it was in February last year, but ANZ, NAB and Westpac have got a long way to go. So look, keep an eye on these banks, right? If we get continuation in the US tonight, our banks have still got probably a bit more in it. Combank still reports in maybe 3 or 4 weeks time, and usually you get a reasonable rally into those reports, so there's still could be plenty more in those banks, guys, from a trading perspective. Something to have a look at in the coming days as well. Now look, you know, I've been talking this for a while now. Vaccines versus stimulus versus lockdowns versus virus, that's what the market's about. If the virus is getting worse, we need to start seeing more vaccine news. If the lockdowns are getting worse, we want to see more stimulus. It has to balance out, right? So the market disconnected from COVID daily numbers a long time ago because it keeps getting promised stimulus. It keeps getting promised vaccines, right? And that dynamic is still there, okay? So just keep an eye on that dynamic, guys. I talk about this every week. It's a reminder. Keep an eye on that dynamic. We want to keep seeing positive vaccine news. We want to keep seeing that you know, carrot dangled of more stimulus, and as long as they keep doing that, the market should continue to hold strength and rise. Okay, overall, what you need to do as a trader is work out what sector is going to be the better sector this month or next month, right? Is it travel this month? Is it banks this month? As you know, the materials have had a stellar rally. They're taking a breather. Banks are now rallying, right? So if you're on banks over the last month rather than the miners, you've done really, really well. Whereas last year, the banks weren't really performing very well for quite a few months there, but the miners outperformed. So as a trader, you need to identify what stocks are the flavor of the month, right? And at the moment, it's the banks. And that might move back towards miners again, right? So you need to be always trying to pick which sectors or which stocks are going to outperform in that current environment. And just the flavor of the month, right? It is literally just the flavor of the month sometimes. So let's just see what Joe Biden brings to the table this week, and then really go from there. If the market breaks to the upside, beautiful. Add to your long positions, guys. Stay long for a little bit longer. Take profits when it tops out again, right? It's simple as that. If it keeps going sideways, though, just really have to be careful on what type of positions you're in. For us, you know, we've got a few options trades going at the moment. Those trades we're going to have to manage if the market keeps going sideways, right? So that's the sort of environment we're in. Waiting for that breakout, keen to get that next notch up, and just waiting for a bit more confirmation, guys. Right? So that's where we're at. Okay. Well, thanks for listening in today. Not much else to say. Take care and bye for now.